The next step should be to determine who will buy the business.
Bearing in mind what the business owner may want out of retirement, need for retirement income, keeping a role in the business, and what the family wants out of the family business, a few options should be considered. The first should be to consider if the business succession within the family is the best alternative, and the second would be to consider selling the business to the existing management team. And even a third, whether to sell the business to outsiders. The question the business owner should ask himself is, does the choice secure continuity of the business?
Can you address the importance of bringing in professional business valuers?
It is always important to have a clear understanding of the value of a business to plan for succession, for taxes, and for estate planning. For these and other reasons, an objective and independent assessment of the value of a business by a professional business valuer should be taken into serious consideration. Other reasons why it is important to get an objective and independent assessment of a business's value could be for tax planning strategies, such as an estate freeze or a Section 85 tax rollover. Further reasons, when selling all or part of a business ownership to family members, the management team, or a third party. A further reason, should the business owners plan to take the company public through an IPO. Yet another reason, determining the value of a business should the owner or one of the partners or shareholders die. And finally, in case of shareholder litigation.
There are 3 types of business valuation reports.
Right you are again. There are 3 types of business valuation reports: calculations, estimate, and comprehensive. Calculations. This is the cheapest, somewhere between $1,000 and $2,000. A very simple business valuation technique, typically required for simple tax work or corporate finance work. It is based on what-if scenarios. 2. Estimate. This is the next or middle ground approach to business valuation, and it could cost a few $1,000s. A business valuer conducts some industry analysis, looks at multiples, or provides a valuation simply based on his or her expert knowledge. 3. Comprehensive. A comprehensive business valuation would demand an exhaustive analysis, an industry analysis, and a study of comparable transactions. These more intense valuations are typically appropriate for fairness options, shareholder litigations, IPOs, and other reasons, and can cost tens of thousands of dollars. Essentially, depending on the type of valuation report required, the costs vary.